Hello and welcome to the 9th episode of Mortgages Made Easy. Once again, thanks for liking and sharing these videos. Hopefully they're helping people, creating a bit of a library which they can reference to. Had a week off last week, had a great time with the family down in Tenby, but excited to be back. So the topic of today's Mortgages Made Easy is the mortgage illustration, the ESIS, the KFI. Normally get this once you've had your appointment with a mortgage broker. So you'll go through the fact find, go through the affordability, you'll do some sourcing of all the different mortgages, you'll work out which is probably going to be the best one for you, and then he'll print off or email you at the moment, with regards to COVID, a illustration document. It might have ESIS on the top, or it might have KFI, or it just might say mortgage illustration. Now, certain things which they should have on these illustrations, I've got one by here. I'm going to try and show you, but it might go blurry, but I'll try my best. Mortgage illustration document. So what I've done, I've done a mortgage for myself, fictional mortgage. And what I thought was I'd try and talk you through the mortgage illustration document, because sometimes you're in a meeting, could have gone on for an hour, maybe more. And mortgage broker gives you the key facts illustration. You're sort of glad because, oh yeah, we can get a mortgage, and oh yeah, we're gonna be all right. But then you don't actually read the detail, or you don't know what you're looking for. So I thought that I would just quickly talk you through the mortgage illustration. So it's going to be select bits. I'm not going to go through it word by word. What I will do is pick out the best bits. The best bit for you is you just want to get to the bit which says, this is how much it's going to cost you per month. That's what you're looking for. So you're sort of waiting there going, oh God, how much is it going to be? Probably already discussed it a certain amount. Anyway, you should put a budget in, but this sort of tells you. Just to back myself, back myself up. This is only an illustration as well. It's an illustration of the mortgage you could have. It's no, it's not an offer. It's nothing. It's just an illustration. So, page number 1 confirms the lender. In this case, TSB. Gives you the details of TSB. Number 2, the intermediary. Now that is me, or King Financial Services in this case, and it gives you our details. It also discloses quite clearly how much TSB will pay us in order to broker this deal between you and them. Now the broker fee, the proc fee as it's called, every mortgage broker gets that from brokering a deal. And it's there in black and white because everything has to be clear and transparent. Okay, so I don't know if you can't see it, never mind. Right, so number 3 is the features of the loan. So I went for a remortgage, 2-year fixed, no fee, product transfer. So that was like, I already had a mortgage with TSB, didn't want to pay any fees, wanted to stay with them, and then fix my initial term for 2 years. Amount of loan to be granted, 150,000, duration of the loan, 25 years. So obviously the mortgage broker would have put this in, and no doubt we're all accurate. But you've just got to double check these things, because it might not be what you thought. If you've gone through a lot of different scenarios, just make sure this is the right illustration that you were talking about. Total amount to be paid, 219,690. Remember, my mortgage is only 150,000. So that would be if you stayed on this mortgage through the fixed term, the 2-year that I went for, and then went on to the standard variable rate for the rest of the mortgage, in this case, 23 years. So that does put it in perspective. If you don't start changing from fixed rate to fixed rate, then you're paying a lot of interest off, and that's the total amount you'll pay. For borrowing 150 grand, you'll pay 219,000 in this case. Means you'll, yeah, there's a good one. It means you'll pay back £1.46 for every £1 borrowed. Okay. The interest rate has to be quoted on here. At this point, this was quite a low interest rate, fixed rate of 1.44. So I'm like, oh, wicked, that's good. Got 1.44 for 2 years. But if I forget the change to go from another fixed rate, it then goes up to 3.59. which is over double on the interest. So you've got to read this, make sure you understand your fixed term at the start and the implication it will have if you did go up onto the standard variable rate. There's also a standard warning about if interest rates did rise. As once you're on the standard variable rate, if interest rates went right up, then it tells you that the risks that you could be under, because you've got no control over interest rates. I can't control them, you can't control them. So if you're on the standard variable rate, you're not fixed in, you're open to either going up or going down. So then it states number 5, number of payments, 300. So this is the bit that you guys are looking for. Number 6. This is where you find out in your fixed term period how much you would or could be paying. Remember, this is only an illustration. So in this case, £595. But if I don't change from the fixed rate, go up the standard variable rate, it goes up to £744. So as it says here, you've got to be aware as if your income's going to change, because if your income's going to change, it's going to go down. You've got to make sure that you can pay, because otherwise as it always says, if you do not complete repayments on your house, it could be taken away from you. So that's when you start to not switch off. Yeah, you're excited there, and you're like, oh wow, we can afford that. This is looking promising. Mortgage brokers positive as well. So then you're like, oh yeah, babe, things are great. Yeah, you shouldn't switch off. Do not switch off there. There's more important stuff to come. So number 8 is about early repayment charges, right? So in the first year of this mortgage, the first year of the fixed term, now remember it's fixed for 2 years, if I wanted to get out of this mortgage or pay it off, I would have to pay £3,000 in early repayment charges. And in year 2, I'd have to pay £1,445. So that's why your mortgage broker might sort of really want to talk to you about your fixed term period, because say you had a 5-year or a 7-year fixed period, it goes up in percentages. So therefore, if you had a 7-year fixed, you'd be looking at a lot higher early repayment charges in the first years as it came down. And if you don't really know too much, if you're not settled completely in your house, in your situation, then 7 years is a long time. Think back 7 years, what was going on? So much has changed in my life in 7 years that if you were fixed for 7 years, that is quite a long time. So just be careful with the fixed. 2 years, 5 years. There are 7-year and 10-year products out there as well. Like I said on one of the videos, I've done a 10-year fix for someone and they were completely happy with it. And I was happy to give it to them because of their situation. It all comes down to your specific situation, but make sure you check out the early repayment charges, because they can be, well, just don't want any nasty surprises. Portability, very difficult to explain in detail, but if you can imagine this mortgage, can't do a house, I don't think, with this. This mortgage can be ported, as in picked up, taken with you and put down on a different property. Always go back to your mortgage broker if you're thinking of doing that. Experts need to have a look at that for you, because there are different ways of even making it, doing different things. Let's just keep it like that for now. Port in, pick it up, put it down on a different property. But you need to go to your mortgage broker to discuss that, see if it's the best option. This is brilliant. Overpayments. Now, let's have a look. My payment on this mortgage, if I can find it, my payment on this mortgage is £595 a month, right, on my fixed term period. Now, if I have got if I got £100 spare per month, and it's done everything with the kids, there's literally £100, you know, everything's taken care of, then if I pay that £100 a month off, as long as it doesn't go over 10% of the overall mortgage, then it comes straight off the mortgage balance. So you can set up an overpayment. A lot of my clients have done that over time, and it just brings the mortgage balance down. Excellent. So that you can see it does pay to read these other small prints. Overpay, a fantastic feature on mortgages. Payment holidays. And then it comes down to some of the, it comes down to some of the other aspects within this mortgage deal. So free valuation, just make sure, just check if it's a free valuation, you've got to pay for valuation. They're all different deals. That's why when mortgage brokers talk about products are the mortgage, but it's all the other things involved in it as well. So on this TSB one, we've got a free valuation and free legals as well. So I don't have to pay for anything for free valuation, don't have to pay anything for legals. But this is quite a simple mortgage. If you had a more complicated mortgage, then they might charge you for valuation, might charge you for legals, or you get your own conveyancer. Simple as that, really. You've just got to look into the smaller details. Just a little bit about, 7 days to cancel if you wanted to. Always on there, if you wish to register a complaint, they got the details for the financial ombudsman. And pretty much that is it. They make sure that everything is done by the FCA. And then it says about non-compliance of payments. So the mortgage illustration, on this one, it's got something very useful as well. It has got a breakdown of the whole 25 years of the payments, which will be very interesting. So I appreciate this video hasn't been absolutely brilliant with regards to showing you the illustration, but it's the best I can do. What I wanted to highlight really was, when you get the illustration, don't think like the appointment's over or the Zoom call is over, because they could email it while you're still on the Zoom call, see? Have a good read of it. Make sure that the detail is how you want it. Ask questions about it. All mortgage brokers don't mind being asked questions. We actually enjoy it because we've got to make sure it's right for you. We don't want anything to go wrong. We want to get these deals through. And just look at the overpayments, early repayment charges. Don't just focus on how much it's going to be a month. And just remember that it is only an illustration. It's not a mortgage offer. Any questions or queries, as usual, just message me. Hope you're all safe and well. And some exciting news coming with Rollies Rewards and also my first advertising board, which hopefully be going up this week. So anyway, hope you have a lovely week. Contact me for mortgages, insurances, and I will hopefully be working with you pretty soon. Thank you very much. Bye-bye.